Hi everyone, Nick Nielsen, Certified Financial Planner. Today I want to share with you 8 charts that make us excited to be long-term investors. In October of 1974, Time magazine released this iconic cover about our fight with inflation, recession, and oil. Sound familiar? In October 31st, 1974, the S&P closed at 73. Currently, the S&P 500 is around 4,100, approximately 54 times higher. There have always been reasons not to invest, such as terrorism, war, natural disasters, and geopolitical strife. However, successful investors have managed not to act upon their very real emotions. Many investors follow their emotions. They buy on elation, sell on fear, and repeat until broke. Compare the return of the S&P 500 during the previous 20 years of 9.5%, or a 60% stock, 40% bond portfolio that returns 7.4% annually, with the average investor return of 3.4%. Carl Richards discusses the gap between the investor return and the return of the underlying investment as the behavior gap. Hopefully, a financial planner can be a steady guide to keep you invested in good and bad times. Remember, most wealth is created in quote-unquote bad times. In a B of A Global Fund Manager survey, notice that the 2 previous spikes occurred very near market lows. Risk-taking is near a low. This is a great indicator that we are not in a euphoric moment. We are currently at a record low of consumers who expect stocks and bonds to rise. Once again, on the emotional roller coaster, it seems we are closer to fear than we are euphoria. While the data set is small, 5 previous events, the results are worth taking note. There have been 5 times during the first half of the year where the S&P has dropped by at least 15%. The good news is that during the second half of the year, the S&P 500 has gone up 27% on average. We are incredibly encouraged to be long-term, goal-focused, plan-driven equity investors. At Know My Plan, our investment philosophy is to have access to 6 months of cash, have 5 years worth of portfolio income in fixed income investments, and finally, to have the balance invested for long-term growth. As always, get invested, stay invested, the rest is commentary. Stay safe, invest confidently.